Guys, this is S&P 500 weekly technical analysis for the week of November 21st, 2022. That is from November 21st Monday to November 25th Friday. Now in this S&P 500 technical analysis, the one thing that you are going to notice here is that the movement was very slow and it was quite predictable. Means every day of this week we knew what is going to happen the other day. And other than that, if you notice that last week I told you that we are going into the consolidation, means the S&P 500, the Dow Jones and the Nasdaq, these indices or the entire stock market is going into the consolidation. So this the very small movement. So this, if you have noticed that the movement was there in the first hour or first 30 minutes, and then in the last hour or last 30 minutes, then for the entire day it was just up down up down. It was simply sideways. It was dull. In order to see the clear picture, you need to look into the Dow Jones, because it was the Dow Jones that was responsible for the consolidation. So this is what we are going to discuss in this S&P 500 technical analysis. But because see, Dow is the face of the economy. Because of the Dow Jones, we have seen the sideways, or not exactly this is the sideways, but we will say that there are dull movement in the S&P 500. I was giving the updates to my YouTube community members, and I was telling them that, see, this is the situation, this is what is going to happen, this will be, so whether we are going to see the gap up open or the gap down open, and upon gap up or gap down open, what is going to happen, or like what kind of candle is going to form. So everything was there. So we knew very well in advance on this Monday itself. Monday was November 14th. On this Monday itself, we knew that now, because of the movement, most likely there will be the consolidation. On Tuesday, this consolidation was confirmed. On Tuesday, this was confirmed. And then on the Wednesday, it was like 100% confirmed that we are in the consolidation. Then came another, okay, this candle, there was a heavy gap down open. After this, the gap down, it failed to come down, rather it moved up. So again, a further confirmation of the consolidation. Now if you notice that in my previous S&P 500 technical analysis, I mentioned this thing, that on Monday, the previous Monday, either we are going to see a gap up open, or irrespective of open, we will see an upward movement. Means even if there comes the gap down open, we will see the upward movement initially. Thereafter the S&P 500, it can move or it can go anywhere, but initially, even after the gap down open, we will see an upward movement, and thereafter market, means the S&P 500 and the entire stock market, is free to move. But initially this is going to happen on Monday, and exactly this has happened. There was the open, a gap down open, okay, but irrespective of the gap down open, it moved up, and later it came down, but it was able to survive above the Ichimoku cloud, above the boundary of the Ichimoku cloud. Technically this was still in the short term bull trend. So overall the S&P 500, it was in the short term bull trend, but also it was in the consolidation through the Dow Jones. So it was the Dow Jones that was responsible for the consolidation. So I'm going to tell you, or I'm going to give you more reasons that why it was Dow Jones, and why it brought each and everything into the consolidation, for how long the consolidation will be there, when we are going to expect a breakout, and how the Dow Jones and the S&P 500, they are going to behave in the coming week. So each and everything we are going to discuss in the S&P 500 technical analysis. So in my these updates, the S&P 500 daily analysis and the daily updates, I told my YouTube community members that, see, as of now we are in the consolidation. See, the stock market is in the consolidation, the S&P 500 is in the consolidation, and consolidation means that the entire stock market or the S&P 500 is going to simply oscillate between two levels or zones. For the S&P 500, okay, this was from 3907 to 4007, means the oscillation up down, okay, just an oscillation. It was in the zone of 3907 to 4007. That's it. For Dow Jones, it was from 33,200 to 33,900. Anyways, guys, so overall, because of the consolidation, okay, this the movement of the entire stock market, the S&P 500 and the Dow Jones, and also the Nasdaq, it was constrained, not heavy. Other than that, there was, whenever, okay, means when it tried to come down, okay, there was this support, it moved up. Again, it is oscillating. It is still oscillating between two levels, between two zones, just up, down, up, down, up, down, until the D day. Okay, so I'm going to tell you about this, the D day, okay, when we can expect a breakout. Okay, and if that doesn't happen, in that case, we are going to see a long consolidation. Okay, like for like additional 2 to 3 weeks. Okay, so there will be this the consolidation. Means the S&P 500 and the entire stock market will simply oscillate between these the two levels and nothing else, right? So overall, this week was satisfactory, and this the movement of the S&P 500. Okay, it was quite predictable on this the daily chart, and also on these are lower charts like 4 hourly. Okay, these are the charts. Anyways, guys, so if you have not subscribed to my YouTube channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community in order to get the daily analysis and the daily updates of the S&P 500, then you can join my YouTube community. I have given the link in the description of the video and also in the comment section. Now, guys, we are going to discuss the agenda of this S&P 500 technical analysis. And in this the agenda, the first point is the S&P 500 technical analysis on the weekly chart. So I will tell you that what is the trend of the S&P 500 on the weekly chart. The weekly chart is the Hawkeye view. So we look into this the weekly chart just to understand, okay, whether that trend has changed or not, or what is expected to happen and what is not expected to happen. And there is one very interesting thing that is happening not in the S&P 500 but in the Dow Jones. So I will tell you on this the weekly chart of the Dow Jones that what is that exactly, okay, what is that interesting thing. Then comes the second point. Second point in the S&P 500 technical analysis is the consolidation, breakout and FOMC. Means why I have expected this consolidation in the previous week. And if you have subscribed to my channel, then last week I told you that there is now chances of seeing the consolidation, and the consolidation was there, right? So I will tell you that why I have suspected this is the consolidation, and then on Monday and on Tuesday it was confirmed that we are in this means the S&P 500 and the entire stock market is in the consolidation. Now comes the breakout and the FOMC. So FOMC, okay, we will discuss the FOMC and the outcome of the FOMC that can give a possible breakout. Possible breakout to like what? Bullish or bearish? This is something that we are going to discuss in this the point number 2, consolidation, breakout and the FOMC. Because when the breakout will be there, then the S&P 500 and the entire stock market will follow that that particular trend. If it's bearish, then it will be back to 3,500 or even below. Not 3,500, but below 3,500. And if it will be bullish, in that case, a bullish, we know that 4110 to 4150, 4160. That's it. Okay, because there was already a lot of this the manipulation. It is already trading way above than it was expected. So upward movement will be constrained, will be confined, but the downward movement, it will be it can drag the S&P 500 below 3,500 levels, possibly to 3350 or 3150. Again, so we will discuss all of these things in detail, okay, here. Then comes the third point in our agenda of this S&P 500 technical analysis, and the third point is the S&P 500 support and resistance level. So I will give you the support and resistance levels, and as you know that my support and resistance levels, so these support and resistance levels are what I have calculated myself. So, and that is the reason, and if you have subscribed to my channel and if you are watching my technical analysis for last many months, then you should have noticed that my support and resistance level are extremely sensitive, and whenever the S&P 500 hits my support and resistance levels, and not just S&P 500 but the Dow Jones also, whenever these indices they hit my support and resistance levels, then the indices they hold, S&P 500 and the Dow Jones they hold. Most of the times we see a reversal. Okay, bullish or bearish, we see a reversal, and sometimes the accuracy is so high. Like if I mention like 4291, then the S&P 500 will hit 4291 exactly, or maybe like 2 or 5 cents. Not miss this is like 99.99% accuracy, okay, of these support and resistance levels. So I will give you these the support and resistance levels, and once again I will tell you that what we can move, what we can expect, okay, the range, the possible range in the coming week for the S&P 500, right? Then the fourth point in our agenda of the S&P 500 technical analysis is the dollar index and bond yield. Now there is something happening in the dollar index and the bond yield. I was not I haven't discussed the dollar index and the bond yield in last two S&P 500 technical analysis, two weekly technical analysis, right? But this time there is something happening in the dollar index and the bond yield. It is clearly visible in the bond yield, and because these the dollar index and the bond yield, okay, they work with the stock market opposite, just opposite to the stock market. So we will see, okay, how it is going to work. Anyways, then comes the fifth point on in our agenda, and the fifth point is the S&P 500 technical analysis on the daily chart. See, this was the weekly chart for the trend, right? S&P 500 technical analysis on the daily chart. So the daily chart means we want to know that what is happening on this, the daily chart from Monday to Friday, Monday, Tuesday, Wednesday, Thursday, Friday. We will look into it and we will see, okay, that on what particular day, okay, how it can move, or like what will be the probable movement, okay, of this. But again, guys, this is the weekly technical analysis. Okay, whatever I'm going to tell you in this, the weekly technical analysis, they will still be, means, see, I give the daily analysis to, or this the daily updates to my YouTube community members, and those daily updates, okay, they are used for the course correction, and they know, my YouTube community members, they know these things very well in advance, what is going to happen in the S&P 500 today, right, on that particular day, and how it is going to move, where it is going to close, where it is going to open. Okay, so most likely, most of the times, okay, they are very well aware of these things, okay, in advance, even before the open of the stock market. They know like what is going to happen, what they are going to see, what kind of movement they are going to see, right? So that is for my YouTube community members. Then guys, comes the sixth point in our agenda, and this is the probable movement of the S&P 500 from October 21st to October 25th. So again, we will see what is going to happen on Monday, then Tuesday, then Wednesday, then Thursday. Thursday will be the holiday, the Thanksgiving. Then 25th, that will be the Friday, and also Friday. Okay, it will be not the monthly expiry; it will be the weekly expiry. Okay, so we will look into, okay, all of these things. Okay, and guys, because this S&P 500 technical analysis, it will be a bit lengthy. That is why I have made sections in my this S&P 500 technical analysis. So these are the sections. Whichever section you want to watch, you can watch. Whichever section you want to skip, you can skip. However, I strongly recommend you to watch this the entire S&P 500 technical analysis, because there is a tons of information, tons of knowledge, means a lot of knowledge you are going to gain from it. Okay, so I have simply clubbed many things, not just the technicals, but a lot of things, okay, that I'm going to discuss here in this S&P 500 technical analysis. um and also, guys, each section is related to the other section. So if I'm going to talk about like the consolidation, breakout, and FOMC, this doesn't mean that I'm not going to talk about the inflation. I'm not going to talk about the probable support and resistance movement. So everything, each and every section is related to the other section, right? Now, guys, before we proceed further, okay, I want to clear this thing, that this technical analysis is not a financial advice of any kind, in any form or in any manner. This technical analysis is not an advice to place your trades in the stock market in any form or in any manner. This S&P 500 technical analysis is based on the data, based on the technicals, based on the technical data. This technical analysis, this the S&P 500 technical analysis, is not based on assumption. It is not based on speculation. Whether you are making 100% profits within a day, or you are seeing 20-30% losses within a day, these profits and losses are all yours, because I do not know how you are going to interpret my technical analysis. However, I try to clear as much as I can, each and every section, each and everything. But again, I do not know how you are going to interpret my S&P 500 technical analysis. So guys, now let's talk about the first point in our agenda. That is the S&P 500 technical analysis on the weekly chart. So guys, we are here on this the weekly chart of the S&P 500, and this is the first point in our agenda. Let me write it down. This is the weekly chart. W as in weekly. Weekly chart means one candle represents 1 week, not 1 day or 1 hour. One candle means 1 week. And guys, once again, if you have not subscribed to this channel, then please subscribe the channel and click on the bell notification icon. Other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then I have given the link in the description of the video and also in the comment section. So when you look into this, the candle, this is the weekly candle. And if you notice that this is a very small candle where the open was 3978 approximately and the close was 3965. So it's a small bearish candle. Simple, small bearish candle, right? Now, so what is what is the shape of this candle? The shape of the candle is a spindle, is simply a spindle. Okay, so this, whenever we see a spindle, so see whether it is a bullish spindle or a bearish spindle, it simply indicates or it simply confirms a reversal. This is what this kind of candle represents. Whenever we see a spindle, means a candle that is in the form of a spindle, then it is a significator of a reversal. So now you might be thinking, okay, that from Monday onwards we are going to see the reversal. Not exactly, because you must not forget, and we must not forget, that the S&P 500 is in the consolidation. Dow Jones is in the consolidation. If you are expecting a reversal, yes, you can, but the downward movement will be limited. It will be limited. As of now, it will be limited to 3907, right? So you can see a downward movement, not a big deal, but this downward movement will be limited, right? But after an event that we are going to discuss, so once that event happens, then only we can see a breakout. Okay, so as of now, this candle is saying that there should be a reversal, okay, a technical reversal, because of the formation of this candle, a spindle, perfect spindle. So we have seen that the candle is indicating this, the S&P 500 weekly candle is indicating a reversal, right? Now let's talk about the technicals. Now if you look into the technical, this is the upper band of the Bollinger Band, this is the median of the Bollinger Band. Because the S&P 500 has closed between the upper band and the median of the Bollinger Band, it is bullish. Means the S&P 500 on the weekly chart is bullish through the Bollinger Bands. Simple. Now comes the moving averages. Now if you notice, these are the moving averages. So the pattern of the moving averages: clear fan out, bearish, clear fan out and bearish, right? But the closing of the two consecutive candles of the S&P 500 on the weekly chart is above all of the moving averages, indicating a bullish movement, because the pattern is saying bearish, closing of the two candles are saying, okay, bullish. This means overall the moving averages are neutral. In case of the S&P 500, or we can simply say that the S&P 500 on the weekly chart through the moving averages is neutral. Until and unless there comes a crossover in the moving averages, we cannot say, we cannot confirm, and we will not say that it is bullish. As of now, it is neutral. Now let's talk about this, the next technical indicator. And the next technical indicator is this, the Ichimoku cloud. If you notice that the S&P 500 is trading below the Ichimoku cloud, this means that the S&P 500 is bearish through the Ichimoku cloud. Okay, so S&P 500 is bearish through the Ichimoku cloud. Now comes some other technical indicators. So the first one is the MACD. If you notice that the MACD is more than the signal, means MACD is bullish. This means the S&P 500 is bullish through the MACD. However, if you look into the K channel and if you look into the MACD and the signal, the value of the MACD and the signal, both are negative. So this simply means that still the overall trend is bearish on the weekly chart, or for the entire the S&P 500, the stock market, the overall trend is bearish, right? Because the value of the MACD and the signal both are negative, below zero, right? So directionally MACD is bullish, but overall the trend is still bearish. Means even if you see that it is moving up, this is not a significator that we are going into this the long term, this the bull trend, and there is no recession and everything is good, everything is back to normal, inflation has come down. No, 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 no. Okay, so even if the S&P 500 moves up or try to move up, okay, sometimes later, okay, so that will not say that the MACD, that the trend has changed. No, the trend has not changed. Trend is still bearish. Whatever movement you are seeing, this is just for the lower high and then it will come down. Okay, this is what we are expecting as of now. Okay, because the trend is still bearish. Then comes the stochastic RSI. If you look into the stochastic RSI, the K channel is more than the D channel, clearly bullish. Okay, this means that the S&P 500 through the stochastic RSI is bullish. It is bullish. Divergence is normal. Volatility is now coming down from the previous week, but still it is more than 94 or 95% of this the all-time high level, right? So guys, what we have seen here is that through the technicals, okay, let's see what the technicals were saying. So through the technicals, we have seen that the Bollinger Bands, S&P 500 through the Bollinger Bands is bullish. S&P 500 through the moving averages, okay, it is neutral. S&P 500 through the Ichimoku cloud is bearish. S&P 500 through the MACD, it is bullish. However, for the trend, because the values are negative, this means that in the long term the MACD is still negative. Okay, so it is weak bullish. Then comes the stochastic RSI. Stochastic RSI is clearly bullish, no doubt. Okay, so we have, so now we can see that there is only one bearish, one absolute bearish technical, MACD, okay, and the moving averages, we are going to count, okay, both of these as neutral. Simple. Okay, we have two neutrals, one bearish, two bullish. So as of now, everything is neutral. Everything is neutral on the weekly chart of the S&P 500, or it is weak, very, very weak bullish, very, very weak bullish. Okay, but again, the trend, there is no change in the trend. The trend is still bearish. The trend is still bearish, right? So guys, this was the technical analysis on the S&P 500. Now let's see how the bearish trend overall and these up down, okay, sorry, the bullish, bearish, neutral, these technical indicators, how they are going to impact the S&P 500 on the daily charts and on this this the daily movement. So let's see, okay, how it is going to impact and what is going to happen in this particular case. So guys, now we are going to talk about the next point in our agenda, and that is the consolidation, the FOMC and the breakout. So guys, now let's discuss this, the second point of our agenda, and this was the consolidation. This was the consolidation and the breakout and the FOMC, right? These three things. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then I've given the link in the description of the video and also in the comment section. So guys, first of all, what is consolidation, or what happens in the consolidation? See, what happens is that after this a movement, okay, after a long movement, whether it is bullish or bearish, okay, after a long movement, means for many weeks or for many months, okay, or after a manipulated movement in a very short period of time, whenever whenever we expect a reversal. For example, it was bullish, now we are expecting a reversal, a bearish reversal. So whenever there will be a bearish reversal, then the S&P 500 and the Dow Jones and the Nasdaq, means, and the entire stock market will come into this the bear trend, right? This was the bull trend, this will be the bear trend. Or in the in this the other case, whenever, okay, so there was this the very heavy manipulated movement, very heavy manipulated movement, and the S&P 500 and the entire stock market has covered a long distance in very short period of time, and now we are anticipating a reversal. Means whenever there comes a reversal, the S&P 500, it should come down, right? So whenever we are expecting a reversal, or it was in the bear trend, okay, for for many weeks, or it was in a bear trend through manipulation, and now we are expecting a bullish reversal, okay, Means whenever we are seeing a reversal, whether it's a bullish reversal or a bearish reversal, after this the movement in the market, movement in the stock market, okay, after a long period of time, or after this a manipulated movement, whenever we are expecting a reversal, but for some reason the reversal is not seen, rather the market, the entire stock market or the S&P 500, it try to hold, and it goes range bound, okay. This is what we call as the consolidation. Means it was supposed to come down, but it is not coming down, it is not giving up, rather it has moved into this the consolidation, and it is just moving up and up and down, up and down. Now what is happening when it is moving up, down, up, down, up, down? Whosoever, let's say there was someone, okay, and this guy or this, okay, or these people, they have they have gone bearish, okay, at this particular level. However, the stock market or the S&P 500, it has breached these levels and it went bullish. Now they are expecting, and they are heavily expecting it to come down. Because it is not coming down, because it is simply consolidating, and because no one knows that for how long the S&P 500 or the entire stock market will consolidate. This means that at some period of time, like for after 1 week, after 2 weeks, after 3 weeks, these people, okay, who were holding their trades, okay, as bearish, now they will be fed up, okay, they will simply fed up, okay, with this kind of movement. And now they will, because see, if they are in the options, then definitely they are losing a lot of money because of the consolidation, right? If you know the option, then we have the theta, and there's a theta simply, okay, it is the time decay. It simply eats up the value of the premium, okay, each and every day, right? So now these guys will be forced, these guys will be compelled to close their trades during the consolidation only, because now they do not know that whenever that that when exactly there will be a breakout. Secondly, they do not know whether there will be a bullish breakout or the bearish breakout. So what happens in the consolidation? Oscillation. If you have heard of this, the wave theory, okay, we have these the waves, okay, up, down, up, down, up, down, okay. This is what? This is the wave, okay, means the oscillation. So during the consolidation, there comes this the oscillation, okay, movement. It is simply, so you will notice that it moved up, it hit this the upper, in every consolidation we have this the zone, and the zone has the upper level, okay, or the upper zone, or this is the lower zone, and then we have the median, okay. So it will move up, it will hit this the upper zone, then it will come down, then it will hit this the lower zone, and then it will move up, okay. This is how it is going to work. So in the consolidation, the entire stock market or the S&P 500 or the Dow Jones or the Nasdaq, okay, so the stock market can remain in the consolidation for like okay, as long as like more than a month or about 2 months, okay, maximum, that what I have seen, okay, about 2 months, or just a little less than the 2 months, okay. So I have seen this, the consolidation means for these approximately 2 months it will simply oscillate between two levels and nothing else, okay, as if that the stock market, okay, it is on vacations, okay, there is no one in the stock market to trade, right? So, and or as early as, or as short as like 1 week, okay, minimum 1 week to 2 months, okay, or just around 2 months. In some other stock markets, some European stock market, some Asian stock market, I have seen the consolidation for like 3 months, okay. So that happens in this the consolidation. So it is just like up, down, okay, this kind of activity. This activity is simply going to help the traders, okay, who are selling the option. If you are the one who know how to sell the option and how to cover your trade, okay, this the selling thing, okay, and we have many of these the option trading strategies. If you know, then yes, during, okay, the consolidation, you are going to make money, and you are going to make safe money means chances of losses are less than 1%, okay, because you know that it is in the consolidation, it is not going to give, okay, this the heavy movement, okay, in these either sides, right? Anyways, this is what happens, okay, in this the consolidation. Now the question is that why we are seeing the consolidation, why there is a consolidation, why a consolidation, okay, why not a movement? The answer you are going to find here in the Dow Jones, okay. The Dow Jones is responsible for this the consolidation. This is the weekly chart of the Dow Jones. This is the weekly chart of the Dow Jones, right? In this, the weekly chart, what you are going to notice? That there is a candle, a bull candle, right? However, the other aspect of this, the bull candle, is this candle closed inside the Ichimoku cloud. This candle failed to close above the Ichimoku cloud, because if this candle would have, so when I say candle, I mean the Dow Jones. If the Dow Jones would have closed above this the Ichimoku cloud, then only we were supposed to consider, okay, this as a probable or a possible change in the long term trend. When I say long term, like for 1 year, for 2 years, or for 3 years or more, right? But as of now, the situation on the ground, the global economy, everywhere, the situation is not supporting a new higher highs, okay, or a new absolute high, or a long term bull trend. That is not there, because the companies have posted these are bad earnings. The valuation of the companies have come down. If not, then the valuation will come down, because that is not the actual valuation, okay, after this, after posting these are disappointed, okay, these are disappointing earnings, right? And that will simply force these indices to come down, as simple as that. So this is with this the Dow Jones. Other than that, what you're going to notice, there was a very heavy manipulation in the Dow Jones in last 3 to 4 weeks. Okay, from this the month, okay, so last week, sorry, last month, okay, it was the earnings, it was the earnings month, right? And the last week of the last month, okay, these the giants, so the giants have posted their earnings, okay. Other than that, we have seen that there was some other factor recently. There was this the CPI in the picture, the CPI data, right? So there was a very heavy manipulation in the Dow Jones. Dow went against the technicals. And once again, if you have subscribed to my channel, and if you have watched my I guess uh, previous to like last 2 or 3 these are technical analysis, then I have told you, and I have shown you through the charts that, see, there are 8 or there are 5 these the technicals that are saying that the S&P 500 must come down. No power in the world can help the S&P 500 to move up, except the manipulation. Manipulation is the only thing that can help the S&P 500, sorry, this is the Dow Jones, to move up. Without manipulation, it is impossible for the Dow Jones to move up, right? So there was a manipulation against all odds. So the entire, so this the Dow Jones, it was moving up, the S&P 500 was moving up, everything was trading, okay, against the technical, just moving up and up, right? This is the first point. Because it failed to close above this the Ichimoku cloud, it has closed inside the Ichimoku cloud, 2 consecutive closings within the Ichimoku cloud. Okay, this is not good. This is not good, right? So this is something that was indicating, okay, this the consolidation. Last week, because this candle has closed inside this the Ichimoku cloud, so this candle and also the movement on last Friday, okay, that we have noticed and that we have observed, that was indicating that yes, now there is some good probability that the entire stock market, or the Dow Jones and the Nasdaq and the S&P 500 can come into the consolidation, and it was there, and that was confirmed on Tuesday, right? Now, other than that, if you notice that this the daily chart of this the Dow Jones, okay, if you notice that there is this the movement, this movement is very much confined, okay, just up and down and up. It moved up, then it moved up, came down, moved up, then came down, then up, then it came down and up, right? So just up down, and the median is that 33,600. So the oscillation in the Dow Jones is happening around 33,600. In case of the S&P 500, it was 3970 or 3960. Okay, and earlier on Monday, Tuesday, okay, it was 3980. So now it is around 3960 or 3970. Okay, that is the point of oscillation, that is the median. So now we can clearly see that the Dow Jones is trying to save itself. There was a very heavy manipulation. Okay, it has covered a lot of distance in very short period of time. Now rather than coming down, the Dow Jones is trying to save itself, and it don't, and this thing, okay, the Dow Jones, okay, it doesn't want to come down, simple, right? However, this is not someone's, okay, hand, okay, or someone is saying, or someone can say, okay, the Dow Jones, okay, it will not come down. No, there will be some data that is going to impact this, the upward or the downward movement. Okay, so as of now the Dow Jones is holding. Okay, the market movers, they are making money. The people who know, okay, how to make money by selling, okay, they are selling these the options, and they are making money. Okay, other than that, people, okay, who are very active, and they know, and whenever they see that this is the, okay, that this is the zone, this is the level, then they will short, then they will book their profits here, then again they will buy, and then they will book. And this is exactly what I was telling, okay, to my YouTube community member, that see, this is what is happening. Okay, it has moved up, now it is going to come down, and it has come down, now it is going to move up. So this was with the consolidation. Now comes the FOMC. This is the FOMC. Okay, it is on 23rd. FOMC on 23rd, just one day before this, the Thanksgiving. Now in this, the FOMC, what we are going to be, okay, what we are looking for, we are simply looking for whether the Feds, see, we have recently seen a 6% decline in the inflation. A 6% decline in the inflation, okay, it has helped the entire stock market to move up. Okay, and you can clearly see that intraday S&P 500 was 5.5% up, right? Then the Dow Jones, and then the Nasdaq. And the Nasdaq, okay, it was more than 7% up. Okay, so there was a very heavy movement, considering that there is a 6% decline in this the inflation. Okay, however, the inflation is still 7.7. It is approximately 4 times the acceptable rate, right? So the entire stock market, it has cheered, okay, that now because inflation, okay, it is coming down, or it has come down, okay, by 6%. This means that the Feds are not going to raise the interest rates, okay, or if they are going to raise the interest rates, then they will slow down, right? Now on 23rd, the FOMC, we will come to know what the Feds are thinking based on this, the 6%, whether they are going to count the 6% or not. And this is again the same thing that I mentioned in my last this the technical analysis, last weekly technical analysis, that see, Fads, okay, fads do not react like these, that the traders in the market, the stock market. Fads wait for at least 1 quarter, for 3 months. If this the inflation, if it stabilizes in this the 3 months back to back, okay, month on month, then only the fads can consider, okay, possible rate cuts, okay, or sorry, not the rate cuts. They are not going to cut these the rates. Rather, they can stop this raising the interest rates, or they can raise the interest rates, but not by 75, but maybe like 25 bps, maybe like 50 bps. Means they can give some kind of relief to the entire stock market, to the S&P 500 and the Dow Jones and the Nasdaq, right? On 23rd at 2 p.m. Eastern time, again at 2 p.m. Eastern time. Okay, see, if you are my YouTube community member, then again we are going to do the same thing that we did, okay, recently last time, and you guys have made a lot of money, okay, on that particular day. So on this, the FOMC 23rd, okay, I will tell you that first half, what we are going to expect, how the S&P 500 it is going to move. Then in the second half, okay, the volatility, it will increase, and 2 p.m. and after 2 p.m. what we are going to expect. Okay, immediately when the FOMC will be out, okay, and I will tell you, okay, that this is the real picture. And most likely the market manipulators, they will try to move the stock market, or the S&P 500 and the Dow Jones and the Nasdaq against this, the FOMC. So I will tell you that what is the real picture, and you can use the opposite movement as an opportunity to come, okay, or to follow this the trend, right? So again, and if you are not my YouTube community member, then I have given the link in the description of the video, and also in the comment section. Okay, so you can use that link in order to join my YouTube community. So 23rd of this November. Okay, so wait for it, and we'll be very active, okay, on that particular day, intraday. Okay, again, you need to make money intraday. Okay, most and also it will give you an excellent opportunity, okay, to go okay, or to plan your trades for the long term. So I will tell you these the scenarios, okay, these and these things. Now comes the breakout. As of now, we are anticipating this the consolidation to be there, okay, for next few days until 23rd of November. That is Thursday. Sorry, that is Wednesday. So on Wednesday there will be, okay, this thing, the okay the at 2 p.m. The FOMC. Until then, we are expecting the entire stock market, SP500 and everything in the consolidation. Now on Wednesday, if the FOMC says, or if whatever is written there in the FOMC, okay, if it says that there is no relief to the stock market in any form, in that case there will be a bearish breakout. Simple, a bearish breakout. Okay, this bearish breakout will be towards 3500 or below 3500. Not intraday, not intraday. I'm not saying that within one day, okay, the S&P 500 it will come down by like 400 points. No, no, that is impossible. That is impossible. Okay, even in even in a worst case scenario, that is impossible. Okay, 12% within a day, 13% within a day. No, indices indeed. See, these are the indices. Okay, these are not the stocks. Stocks can give you 25%, 30%, 40% within a day, up or down. But indices can give you 3%, 4%, or in an exceptional case like 5%, right? So this is the bearish breakout. Whenever you see this the bearish breakout, and whenever it comes down heavily, then we have 3840. 3840 will try to give some support to the S&P 500, the zone of 3840. And after breaching this the zone of 3840, then only the S&P 500 it can further come down to 3790, then the zone of 3735, and then finally 3675. Okay, so these things we are going to discuss, okay, in the support and resistance level. Now comes the bullish breakout. Now, whenever, so if the FOMC indicates, or if the FOMC says that yes, Feds are happy with the 6% decline, and now Feds are seriously thinking about possible this to pause the rate hikes, okay, or to slow down these the rate hikes. In that case, there will be some this the said there will be some celebration in the stock market and the S&P 500 and in the Dow Jones, and because of the celebration the S&P 500 will see a bullish breakout. Now there is a catch. Okay, in this the bullish breakout, so just like in the bearish breakout we can see 3000, 3500 and 3350, sorry, 3350 or 3150. In the bull side, the upward movement will be limited to 4110, okay, or at max to 4160. This is the zone. That's it. That's it. Upward side, this. Now question is that why it is limited? This is limited because there was already a lot of manipulation, okay, recently, and now earlier this was the confluence zone, this was the consolidation, this is the zone. This means that even with the manipulation, the S&P 500 will not be able to breach this the 4100 or 4160 zone, okay, in this week, in this the coming week, right? And also, if we see a bullish breakout, this bullish breakout will be seen on as early as on Wednesday itself, okay, when the S&P 500 or the entire stock market will be about to close. This means that there will be a movement on this the Wednesday. Then there will be finally there will be some good or heavy bullish movement on Friday, right? But again, 4110 to 4160 because of the manipulation that we have seen. So the entire stock market, the S&P 500 and the Dow Jones and the Nasdaq have already okay, they have already okay, covered this the upward movement, right? So this is with the bullish breakout. And guys, once again on 23rd of November, I will tell you that what kind of breakout we are going to see. Okay, if there comes a bearish breakout, then feel free to sell. Feel free to sell. Okay, or buy put options, short selling or put options. Okay, and if there comes this the bullish breakout, then I will tell you that on that particular day, Wednesday, based on the movement, okay, I will tell you that what will be the levels that we can expect, okay, or by Friday, okay, we will see, okay, then again what are the levels that we can expect the S&P 500 to hit on that the Friday, right? So guys, this was the second point in our agenda, the consolidation, the breakout and the FOMC, right? Now guys, let's move on to this, the third point in our agenda. And the third point in our agenda is the support and resistance levels for the S&P 500. So guys, now comes this the third point in our agenda, and that this the third point is the support and resistance levels for the S&P 500. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then I've given the link in the description of the video and also in the comment section. Now guys, in this the third point in our agenda, okay, we have this. Okay, so like I told you that I'm not expecting, or technically it is not expected, that the S&P 500 should go and breach above breach 4110 and then go towards 4200 and so. Okay, so we have 4110 to 4160, a very strong resistance zone for the S&P 500. Then we have around 4060 also, 4065. Then we have 4035. This is again a very good the resistance zone, or very strong resistance zone. Then we have 4022. 4022 is the 200-day EMA. This is the 200-day EMA, right? And guys, once again, I have discussed the 200-day EMA a lot of times, okay, in last many weeks and last many months, right? Then we have 3990 immediate resistance. Then we have 3960. Because the S&P 500 has closed above 3960, this means that the S&P 500, this the 3960 is going to act as support for the S&P 500. Now a very good support is the zone of 3935. Very good support. Okay. Then comes the next very good support at 3884. Then finally a very strong support at 3840. Even if it comes down heavily, it is going to find some support at 3840 before coming down further, right? It will find a very good support at 3840. Then we have 3790, the next this the support zone. Okay, then we have this the 3735. Okay, again a very good or very strong this the support zone, right? So as of now, in the upside we have 4110. Sorry, in the upside we have the 4110. Okay, and here we have 3840, and then we have 3735. Okay, so these levels are going to work, or these levels will work, okay, very well in the coming week. So guys, these are the support and resistance levels. Now let's move on to the next point in our agenda. Now guys, let's move on to the fourth point in our agenda, and the fourth point is the dollar index and the bond yield. So like I told you that there is something interesting, this thing is happening, okay, in the dollar index and the bond yield. So let me show you, okay, and as you know that the dollar index and the bond yield, okay, they are inverse. They work dollar index, bond yield, and the stock market. So the stock market works inversely to the dollar index and the bond yield. So let me show you, okay, how it works and what we are expecting. So guys, this is the fourth point in our agenda, and this fourth point is the dollar index and the bond yield. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community, then I've given the link in the description of the video and also in the comment section. So this is the dollar index. Now if you look into this, the dollar index, it was holding very well above its 200-day EMA, the dollar index. And because it failed to breach, because it failed to close below the 200-day EMA, this means that we are going to anticipate a reversal, or we are seeing a reversal in the dollar index. Now because see, whenever the dollar index, okay, we see that the dollar index is moving up, this indicates that the S&P 500 and the entire stock market, it is going to come down, because the dollar index, it works inversely to the stock market, or the S&P 500, right? And again guys, dollar index, I've told you many times what it is, how it works, okay, everything. So as of now, let's stick to, okay, this the movement only. So as of now, we are anticipating a reversal in the dollar index. This reversal, okay, like it is expected to be there for at least 1 or 2 days, and because there will be this kind of reversal, so we can expect a downward movement in the S&P 500 and in the stock market. So this is one thing, right? Now comes this the bond yield. So if you notice in the bond yield, okay, there is this the one very interesting thing in this the bond yield. Bond yield is bullish. Bond yield is bullish. It has regained its bullish movement, and the technicals in case of the bond yield are again, these technicals are going bearish. Sorry, the technicals are going bullish. Other than that, we can see clearly, we can see that the closing of this the 2-year bond yield, it was above all of the moving averages on Friday, right? And a kind of slip, not okay, not this the perfect slip, but a kind of slip. So this is an indication that the bond yield is also going to increase, if not for long, that at least for 1 to 2 days, because the bond yield is going to increase, okay, like up for 1 to 2 days. This means that we can expect the entire stock market and this the S&P 500 to come down accordingly. Okay. So this was something, okay, that I wanted to show you, that there is this the bond yield has regained its bullish momentum as well as bullish movement. Okay, so this was an opportunity where, so it found the 2-year bond yield, okay, it found a very good support here, and then now it is moving up, and now it is anticipated. See, as per my technicals, or as per okay, if I analyze this the 2-year bond yield further, then I can clearly see that it is going to move up. Okay, means it can try to hold, okay, on some levels, but eventually it is going to move up, or it is going to breach, okay, these are levels, right? And then it will resume its journey towards 5% or 5.1%. Okay, like, yep. So I guess that was 5.1%, its sector that I told you last month. Okay, that the bond yield, okay, it is going to move up or it is increasing. But not last month, okay, but in this month only, that it is going to increase, and it will further increase until and unless it hits these the critical levels, right? So because again the bond yield, the bond, okay, and the dollar index, okay, they work inversely to the stock market. Simple. Because bond yield and the dollar index, they are expected to move up, this means that the stock market is expected to or is coming down, right? So guys, this was the fourth point in our agenda, and now guys, let's move on to this the fifth point in our agenda, and that is the S&P 500 technical analysis on the daily chart. So guys, before we discuss this the S&P 500 technical analysis on the daily chart, I have this information to share with you, that if you want to get this the daily updates, the daily analysis of the S&P 500, then you can join my YouTube community. So I have given the link in the description of the video and also in the comment section. So once you click on that link, then you will see my channel page. On this channel page, there is this the join button, JOIN join button. So once you click on this the join button, then this pop-up will open. In this pop-up, you will see that there are these two options: only one midweek update and all midweek updates. Only one midweek update. So what is this the midweek update? Midweek update means the daily analysis, the daily updates of the S&P 500. Only one midweek update means that you will get the daily analysis, the daily updates of the S&P 500 only on Monday, every Monday. And all midweek update means that you will get the daily analysis, daily updates, and each and everything of the S&P 500 from Monday to Friday, each and everything. And if you notice that more than 95 or 97% of my YouTube community members, they have opted for the all midweek updates, means they are getting these the updates or the daily analysis or the daily updates of the S&P 500 from Monday to Friday. So whenever you want to join the YouTube community, you are welcome. And once again, the links are in the description and also in the comment section. Now guys, let's discuss the fifth point of our agenda, and the fifth point of our agenda is the S&P 500 technical analysis on the daily chart. So guys, once again, if you have not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then I've given the link in the description of the video and also in the comment section. So guys, let's do this the daily analysis, this the technical analysis of the S&P 500. So guys, this is the daily chart. This is the daily chart. Daily chart means that one candle represents one day, not 1 week or 1 hour. One candle means one day. Earlier we did the technical analysis on the weekly chart of the S&P 500, and now this is the daily chart. Okay, so these are two different charts. First of all, there comes this the candle. If you look into this the candle, this candle looks like a doji candle, but in actual, okay, this candle is not a doji candle. Okay, it's a simple bear candle, simple bear candle. Other than that, it might look like, okay, a hammer, but this is not a hammer because the body is not thick. Okay, there is no thick body. So this means, okay, that this is the candle. Okay, as such, this candle is simply signifying the change in the trend, or this the bearish movement or the bearish sentiment. Okay, however, the closing of the candle was in the first half, means in the bullish half. Okay, this means that there will be mixed sentiment. So overall, this candle is signifying a possible change, in or a reversal, or a mixed sentiments, bulls and bears. Okay, this means that this candle again can push the S&P 500 into the consolidation on Monday. As simple as that, right? So that we will discuss, and that I will tell you, okay, in this in the next part, okay, the probable movement of the S&P 500 in the coming week, right? So as of now, this was with the candle. Now let's talk about the technical indicators. So the technical indicators, first comes the Bollinger Band. This is the upper band of the Bollinger Band. This is the median of the Bollinger Band. Because the S&P 500 has closed between the upper band and the median, this means that the S&P 500 is bullish through the Bollinger Bands. Simple. Then comes the moving averages. Moving averages, clear fan out, bullish fan out, bullish fan out. Okay, and the closing of the S&P 500 was above all of the moving averages. This means that the S&P 500 is bullish through the moving averages. Then comes the Ichimoku. Because the S&P 500 is trading above the Ichimoku, this means that the S&P 500 is bullish through the Ichimoku. On this day, this was Thursday. On Thursday, okay, it came down and it hit the this the Ichimoku. It tried to enter, but it failed. So that was another indication that the S&P 500 is not going to give up anytime soon, and we can further see an upward movement. This was the reason when this candle was formed, I told my YouTube community member that, see, on Friday we are going to see a gap up open, okay. And on Wednesday, when this kind of candle was formed, so I told them that on Thursday we are going to see a gap down open. So gap up, gap down, and also on this the gap down open. So this way, my YouTube community members, even though there was no movement, no significant movement, but my YouTube community members, they were making money, okay, through this, like not that the big money, but this, okay, this the small profits through this the gap down open or the gap up open. So this was something they knew very well in advance. So these three technicals are saying that this is S&P 500 is bullish through the Bollinger Band, S&P 500 is bullish through the Ichimoku, S&P 500 is bullish through the moving averages. Now let's see what other technical indicators are saying. So the other technical indicators, we have the MACD. MACD is clearly bullish. MACD is more than the signal. Both are positive. In the weekly chart, we have seen that both were negative, means the overall trend is negative, bearish, right? But on the daily chart, both are positive and MACD is more than the signal. Okay, this means that S&P 500 is bullish through MACD. Then comes the stochastic RSI. Stochastic RSI, K channel is less than D channel, but both are above 50. This means that S&P 500 is bearish through the stochastic RSI. However, there is still some bullish momentum in the S&P 500, right? Because it is trading, both K and D are above 50. Then comes the divergence. So divergence is normal as of now. Okay, not a problem, normal. Volatility is coming down because of the consolidation. Okay, this is the normal behavior of the stock market or the S&P 500 or the Dow Jones. Okay, and the next step, that whenever there comes a consolidation, whether it's an index or a stock, then the volatility, it automatically, okay, it comes down because there is no movement. When there is no movement, the volatility, okay, it will simply come down, as simple as that, right? So what we have seen through all of these the technical indicators is that overall the S&P 500 is bullish on the daily chart. The only problem is the stochastic RSI, which is negative. This means that if on Monday, if there comes, one more bear candle, one more red candle, in that case, what will happen? The stochastic RSI, it will be clearly bearish, right? So, but again, see, whether bearish or bullish, okay, as of now, this thing, okay, it doesn't matter because the entire stock market is in consolidation. Consolidation means it is simply oscillating between these the two levels. That's it. Okay. So until and unless there comes a breakout, either bearish or bullish, there will be no movement in the S&P 500 or the Dow Jones or the Nasdaq or in the entire stock market. Market means the stock market, the S&P 500 will simply oscillate between two levels. So if you can make money in these two levels, means you can buy here and you can sell here, or you can sell here, or you can buy here. Okay, or you can simply sell these the call or the put options, or you can use some of these strategies, right? So this is what you can do. Anyways, as of now, we will say that 80 to 90% the S&P 500 is bullish on this the daily chart. Okay, just a little problem, okay, with this the stochastic RSI. Otherwise, it is good. So this was so through this on this the daily chart. Okay, now we come to know that the S&P 500 is clearly bullish on this the daily chart of the on its the daily chart, right? It is clearly bullish. Now guys, let's move on to the sixth point of our agenda, sixth and the final point, and that is the probable movement of the S&P 500 from November 21st, that is Monday, to November 25th, that is Friday. So we are going to see that how the S&P 500 is going to behave or to move, okay, from these from Monday to Friday, day by day. So guys, now let's discuss the sixth point in our agenda, and the sixth point is the probable movement of the S&P 500 from 21st of November Monday to 25th of November Friday. And guys, once again, if you have not subscribed to the channel, then please subscribe the channel and also click on the bell notification icon. And other than that, if you want to join my YouTube community in order to get the daily analysis, the daily updates of the S&P 500, then I have given the link to my YouTube community in the description of the video and also in the comment section. And guys, there is one more important thing, that on this the S&P 500 knowledge transfer program. See, through this the knowledge transfer program, okay, I tell you, okay, each and everything about the S&P 500, the movement, the technical indicators, the trading strategies, the options, each and everything, the entire course of this, the option strategies, the option calculator, okay, the entry, exit, each and everything, support and resistance levels, price prediction, how to predict the price, the movement, just like, okay, so last week I have predicted this the consolidation, and there was this the consolidation, right? Then the market analysis, how to analyze the stock market, what to see, what we can expect. Then the trend analysis, how to analyze the trend. Then the manipulation, then the market hacks with 99% certainty. Okay, so there is a lot of stuff in this the S&P 500 knowledge transfer program. So if you want to opt for, if you want to learn the S&P 500, each and everything about the S&P 500 or the trend analysis or these things, then I am offering, as of now, okay, I am offering this a 20% discount, okay, until November 30th. I have given the link in the description and also in the comment section. You can follow that link and you can send me an email and you will get this the 20% off, okay, on these things. Anyways guys, now let's discuss the probable movement of the S&P 500. See, in the probable movement, the very first thing that we need to understand is that as of now the index is in the consolidation, and the consolidation is coming from the Dow Jones. Okay, this consolidation is through this the Dow Jones. So for the Dow Jones, okay, we have 33,200 to 33,900, 33,900, and 33,600 is the median. So the Dow Jones is oscillating, okay, just means up down, okay, from this the 33,600. So this is the median, and the upper limit is 33,900, lower limit is 33,200. See, there may be, okay, just like up, okay, a few ups and downs. It may be like 33,925, okay, 935, 910, or 33,185, 33,190. Okay, but these are the major levels. These are the major levels. As of now, until this the 23rd, until 23rd, that is the Wednesday, okay, 2 p.m. Wednesday 2 p.m. Eastern time, the entire stock market, the S&P 500 and the Dow Jones, okay, and this the Nasdaq, all of these indices are expected to remain in the consolidation, right? Means as of now you are seeing, okay, that this is the movement. If it comes down, then again it will find support at 3907, 3907, which is the 50% of the Fibonacci retracement level. Then it will simply, then it will simply bounce back. Whenever it moves up, then it is going to find, okay, there is the median price, that is the 3960. Once it reaches, it moves up, then at max it can move up to this the upper level, okay, that is the 4007. 4007 is the 61.8% of the Fibonacci retracement. 3907 50%, 4007 61.8% the Fibonacci retracement. As of now, S&P 500 is going to oscillate between 50% of the Fibonacci and the 61.8% of the Fibonacci. Once it hits this level, then it will see, okay, a reversal. Means simply up down, okay, this thing, nothing else. on Wednesday, uh, at or after 2 p.m. Eastern time, the FOMC will be out. Okay, in this the FOMC we will come to know that what the Feds are thinking. Okay, after the 6% decline in the inflation, right? And other than that, guys, we must not forget that after this the 6% decline in the inflation, the UK has reported, okay, there's a decline in its GDP by 0.2%. Okay, another decline in this the GDP. Other than that, UK has further published, okay, this is the inflation. So inflation has further moved up in the United Kingdom. Okay, so whatever is happening in this the UK, okay, it is reflecting on this the entire Europe. Means the entire Europe, including, okay, this the UK and the entire Europe, is in the long term recession for next 2 to 3 years. It is in the recession. It is already in the recession. So there is no point of discussion that it will enter into the recession. No, it is already in the recession. Okay, the entire Europe. And the visible signs, okay, means you will see as of now, okay, you might be seeing some of these the visible signs, but once this the Christmas is over, okay, the first quarter of the next year, you will see more and more visible signs. Okay, everything will further slow down. And guys, once again, even in the US, the Fed chairman has confirmed recently in his press conference, he has confirmed that everything is slowing down, economy is slowing down, production is slowing down, everything is slowing down. Okay, and also through the numbers, okay, that we are seeing through the FOMC, we will simply come to know what is the mindset of these the Feds, what the Feds are thinking. If there comes no change, absolutely no change, okay, from this the previous S&P, previous press conference, the recent press conference, okay, where the Fed chairman has confirmed that the Feds are going to raise the interest rates by 75 bps. Okay, if there comes no change, and if the Fed says that they are going to raise the interest rates further, even by 50 bps, okay, or by 75 bps, then that will trigger a fall, a bearish breakout in the S&P 500 and in the Dow Jones and in the Nasdaq and in the entire stock market. There will be a bearish breakout, again a bearish breakout. Now comes the bullish breakout. In order to see this the bullish breakout, okay, this the FOMC must mention something, at least one line that says that yes, now the Feds are happy with the 6% decline, and Feds are expecting that this is the 7.7% of the inflation, it will soon come down to 2% or less than 2%. See, 2% is what? 2% is the benchmark inflation. Okay, means the inflation must not breach or must not move or must not go beyond 2%, above 2%, right? As of now, it is 7.7%. That is approximately 4 times of that, the 2%, right? So if this the FOMC says that Feds are happy with the 6%, okay, this the rate hike, the 6% decline in the inflation, and they are going to reduce, or they are going to stop, okay, this raising the interest rates, or they are going to simply decrease, okay, this the rate, okay, by this the 50 or by 25 bps. Okay, let's say they are going with the rate hikes but with 25 bps or the 50 bps. See guys, you need to understand their language. If the language says that the Feds are happy with the 6% decline and everything is going as per the plan, and soon the inflation will further come down, that is why the Feds are going to reduce this the rate hikes, okay, by 25 bps or by 50 bps, then that particular language can trigger a bullish breakout, right? But if the Fed says that no, there is no change, okay, since or from this the last press conference, Feds are still committed to bring down the inflation, and they are not going to give any relief to the economy or to the stock market. However, because they have raised the inflation, okay, like 75 bps back to back 3-4 times, so this time they are going with the 50 bps. Then this particular language that they are not going to give any relief and they are not accepting this the 6% as a significant decline. If that comes in the language, in that case, that language will not give a bullish breakout. You can see that intraday, okay, it moved up, but again it came down, because their language will say that they are not going to stop these the rate hike until and unless, or as long as Feds are going to raise the interest rates even by 25 bps. The entire stock market, it cannot move up, it is not supposed to move up. The manipulators, they have tried and they were successful, okay, in pushing this the entire stock market up, S&P 500 up, S&P 500, it was so earlier it was not supposed to be 3840. It was not supposed to move or go beyond 3840. It moved up. Now it hit the 4035. So if the market manipulators, okay, if they are planning to push this the S&P 500 further up like 4100, 200 or 300, that will give, okay, this, or that will simply push the S&P 500 into the long term bullish trend. As of now, there is no long term bullish trend. Everything has slowed down. Economy has slowed down. So FOMC 2 p.m. Eastern time on Wednesday, remember 23rd of November, right? And again, if you are my YouTube community member, then I will tell you that for the entire day, just like this, the recent FOMC, okay, where you have made some good money intraday, a very heavy money. Similarly, okay, I will tell you that what we are going to expect in the first hour, then first 4 hours, then 2 p.m. after 2 p.m. Okay, and accordingly you can trade, okay, based on my updates and based on my comments, right? Now guys, so if there comes a bullish breakout, this bullish breakout will be limited to what? To 4110, 4110, okay, 4110. It will simply confine this the bullish breakout, and after 4110 we have 4160, okay. This is the zone, this is the zone. So earlier there was the consolidation, not one but two times, okay, there was the consolidation that has formed a confluence zone in the S&P 500, and this was there 4110 to 4160. This means whenever S&P 500 try to move up, it is going to find extremely strong hurdle, extremely strong, and it has to give up because there was already a very heavy manipulation, extremely heavy manipulation. So this means that the S&P 500 has already covered a lot of this the bullish, okay, this okay, this it has already moved up, okay, by a significant percentage. This means that as of now technically there is no reason that the S&P 500 should move or should breach, okay, this particular zone or this 4110. It must give up, okay. So again, after 2 p.m. EST, if there comes some okay, this kind of language that is supporting this the bulls, okay, then it will move up, okay. And I will tell you, if you are my YouTube community member, then I will tell you whether it is going to come down from 4110 or 4125 or 4090, okay. So there are some, okay, some other levels, probable levels, okay. So I will tell you that where exactly we can expect, okay, this is the reversal, right? And also if there are chances that it is going to move up to 4160. So I will discuss that, okay, in my this the update, okay, second or third update probably, okay, in this on this Wednesday, right? So bullish movement will be confined here, right? Now comes the bearish movement. So for the bearish movement, what we know about the bearish movement is that because there was a very heavy manipulation, this means that whenever there comes a bearish breakout, okay, after 2 p.m. Eastern time, bearish breakout will simply mean that as of now the very first thing it will do, that it will come down to 3840. What? 3840, okay. So it will hit the 3840, the zone of 3840. It will find some support. It can show or it can show, some signs of that reversal. But again, this reversal, okay, this particular reversal, it will be limited. It will be limited to 3884. It will be limited to what? It will be limited to 3884, right? Okay. And if the S&P 500 closes here, then the next day, okay, again it can try to hold on Tuesday. It can try sorry on Friday, okay, it can try to hold, else it is going to give up. Again it will give up. So we will see, continuous this the downward movement, 2 to 3 candles, very heavy 2 to 3 candles, and within 2 to 3 candles the S&P 500 will be able to give up like how much, like 7 to 8%, easily 7 to 8%, okay. So after 3840, then it will be coming down, and it will be coming down to 3790. Again, a very okay, very good support, okay. It will find some support and it will breach, okay, and it will come down. Then we have 3734, okay. Then we have somewhere around here we have 3675, okay. Then it is going to find support at 3675, just like 3840, okay. It is a very strong support, okay. After 3675, then we have 3630, okay, and then we have some other levels. So again, okay, I will inform you, okay, as if you are my YouTube community member, so I will inform you that when, okay, if it is coming down, then what new lows it is going to hit, okay, or what levels it is going to hit, and where exactly it is going to hold, okay, where we can expect a reversal, where you can go, okay, or where you can short, and okay, and this kind of business strategy, right? So Breakout, bearish or bullish, will be defined, okay, most probably on Wednesday, 23rd of November. Now guys, one more thing. If there comes a news, any news, okay, good or bad, any news, but this news must be significant, very significant, maybe from like Russia Ukraine war, okay, or maybe from like some other front, some other economic front or political front, okay, any other news that is very significant, that can also give a breakout to the stock market even before Wednesday. That can also give a breakout, okay, but that will depend on that the kind of news, okay, what kind of the means the gravity, the weight of that particular news, okay, and accordingly, okay, I will keep you posted, okay. And these my YouTube community members. And other than that, guys, one more very important thing is here, that if there comes no breakout, if there comes no breakout on Wednesday, if there comes no breakout on Wednesday after the FOMC is out, after the FOMC is out, in that case, the entire stock market and the S&P 500 and the Dow Jones and the Nasdaq will further move into the consolidation for next few weeks, okay, maybe like just like mid of December, okay. See, by the Christmas, what happens is every year, the last 15 days, of the December, okay, particularly from 15th of December onwards or from 20th of December onwards, okay, we see a bullish movement, okay. This is as per the tradition, okay, and I've given you this the reason. Again, last 10 days or 15 days, we will see a bullish movement in the entire stock market. That will be there, no doubt, okay. So what we can see is that the entire stock market, including the S&P 500 and the Dow Jones and the Nasdaq, okay, it is moving into the consolidation until December 15th, or somewhere around December, okay, this December 15th. So I will keep you posted, okay. So it is in the consolidation, and then finally one day now it came out from the consolidation as bullish. If the entire stock market remains in the consolidation, okay, around 15th of December, then most likely we will see a bullish breakout. Simple. Most likely there will be a bullish breakout, okay, as per the tradition in the stock market. And if there comes a breakout, okay, just like, okay, this is the FOMC, okay, or this by the end of this month, okay, November, or first week of December, then there are chances we are going to see a bearish breakout. But after 15th of December, after 20th of December, there will be like very heavy probability, like 90% of the chances we are going to see a bullish breakout. So I will keep you posted, okay. Still a lot of time, okay, it's there. So on 23rd of November, Wednesday, we will come to know, number one, whether there will be a breakout or not. Simple. Secondly, whether there will be a bullish breakout or the bearish breakout. Third thing, if there is a bullish breakout, then on that particular day, okay, where it will be heading to. For example, if on Wednesday, if it is trading around here, the bullish breakout can give it, okay, a movement like 40, 40, okay, 4050, 4060, etc. So I will tell you, okay, through my community notes. And if there comes a bearish breakout, then to what level, and if it is trading around here, then to what level, okay, it can come down, okay, on that particular day. And accordingly, it will define that where the S&P 500 or the stock market is going to move, or it is going to open, or this thing, the movement, okay, on this day, on Friday. That will be the weekly expiry, right, guys? So guys, once again, if you're not subscribed to the channel, then please subscribe the channel and click on the bell notification icon. And guys, other than that, if you want to get the daily analysis, the daily updates of the S&P 500, then I have given the link in the description of the video and also in the comment section, okay, to join my YouTube community. So you can join my YouTube community. And guys, one more thing, that there is the 20% discount on this, the S&P 500 knowledge transfer program. So if you want to join my YouTube, so if you want to participate in my knowledge transfer program, S&P 500 knowledge transfer program, and want to learn each and everything about S&P 500 to self-sustain, okay, to trade all by yourself, okay, for the rest of your life. So in that case, you can participate, and there is a 20% discount, okay. So you can simply drop me an email, okay. I've given the link in the description of the video and also in the comment section. So you can simply drop me an email, okay. So guys, this was my S&P 500 weekly technical analysis for the week of November 21st. That is from November 21st, Monday, to November 25th, that is Friday.